Welcome back to Trading 360, our 360 round. We're taking a look at Amazon and more. Quinn Tatro is with us, Managing Director at Jewel Financial, and Scott Devitt, Managing Director, Equity Research at Wedbush Securities. Thank you both for being with us. So Scott, I mean, when you look at a name like Amazon, and it's at 173 today, you raised your price target to 220 from 210. Outperform rating. Tell me some things that, I mean, there are a lot of people when they look at the Magnificent Seven think that Amazon is the best value play of the group. What say you? What's going to drive this name to this 200, 220 mark?
I tend to agree with that. I think that Amazon has three businesses: the retail business, the advertising business, and AWS. And advertisers have been doing well for quite a time. The retail business got into a better position a few quarters ago, post-pandemic, as it started to get better capacity utilization. And now AWS is strengthening again. So all three businesses are at the very beginnings of operating at peak performance. And with that, you're getting significant operating margin expansion as well, because the company has exerted quite a bit of efficiency and discipline post-pandemic. So margins are going to go from 6% 23 to 8 to probably 10 in 2025. You get low double-digit revenue growth, just a dominant franchise, and operating profit growth that's almost twice as fast as the revenue growth. So we like it, and it's our best idea.
Yeah, unbelievable. One of your best ideas, I see. Quinn, what say you, and what can drive this growth going forward, and where does the AI story fit in here?
Yeah, thanks for having me, Nicole. I would tend to agree with Scott. I do want to reflect, though. I mean, let's not forget, this was a company that people were really concerned about, a year or so ago. Rising employment costs, a consumer, decline, transportation costs. I mean, you name it. And then they turn around and they beat by $4 billion. That's a massive, massive move. Again, when we're becoming concerned about the consumer and slowdown. Not to mention that we're talking about a company that has a forward multiple now of 30 and potential of upside of 35% with the raised guidance in growth. So it's still a relatively inexpensive stock and $60 billion in cash. So all of the metrics are there for this thing to keep going. But what we like the most is what Jassy said on the call, which I encourage everybody to listen to, and that is he believes that the generative AI services could produce upwards of tens of billions of dollars in revenue. That's a game changer for this company. So, you can't count these names out. Congrats to the passive index holders that have a S&P, that this company's number 4th and the largest and moving the averages today, because you're getting the benefit even if you don't own this stock outright.
Yeah, understood. I mean, and it's so hard to quantify when he says how generative AI is going to, add tens of billions of dollars in revenue. It just seems so broad brush, but I believe that AI is helping all of these companies. Scott, what say you about that?
Well, there's different aspects to AI. There's the cost savings in the retail business due to robotics and the implementation of AI related to the replacement of humans in the retail business. There's they launched a digital assistant called Rufus, which helps you in shopping, and that's going to be implemented in the mobile app in coming months. And then you have AI, which is what Andy's talking about in AWS, when you're talking about tens of billions of dollars. That's $100 billion revenue business. So tens of billions is significant, and that's a 30% margin business. So that business alone is valued north of $1 trillion. And so the enhancement in terms of the revenue stream, when you're talking 10 to 20% in incremental revenue over time added onto AWS because of Gen AI, because corporates are now acquiring services through cloud players like AWS so that they can also provide AI solutions. That is a massive opportunity, not just for AWS, but for GCP within Alphabet and Azure within Microsoft.
Yeah. The other side of the coin here, Quinn, is you did note that maybe we'll see a pullback. You wouldn't be chasing the stock. I'd love your big picture, because I guess you have some sort of concern that we might have a pullback in the market, or is that for Amazon in particular?
Are you rewarded for chasing stocks? This might be the one time, I do not know, but if you're if you're on the sidelines and you've got a little bit of FOMO watching the general market, or the or an Amazon or a Meta or something along those lines, I think you take a deep breath. I mean, there's a lot of people on the sidelines. There's a lot of people who just do not believe in this market or this move, and hopefully they're becoming aware that this is real. AI is a game changer. This is really influencing the numbers. But to go out and chase and to make a move based on FOMO, I think is not wise. There will be pullbacks. I mean, we will get pullbacks this year in the market, but this is a stock that you say, okay, when we get a pullback, and it'll be for some reason we do not know, this is an opportunity to be a buyer, not thinking that the world is ending. We will get pullbacks, and that's when you step into this name. We love this name. We love the market, the composite index, and the exposure of this name in the S&P and the NASDAQ. But again, to run out and chase it today, probably not wise.
Okay, Quint and Scott, thank you both so much. Quint Tatro of Jewel Financial, Scott Devitt of Wedbush Securities. Great to see you both today, and a great breakdown there of Amazon.